All right, welcome back to Digital Perspectives, everybody. I'm Brad Kimes. You can follow me on Twitter at Backup Bradley above at the top of the screen. As you know, it is my favorite day of the week, Friday, with guest co-host Cryptopolis in the house. How you doing, Dave?
Hey, Brad, I'm doing great. How are you doing?
Very well, my friend. So a lot has been going on, and we have a ton of it to unpack. Everything from the repo market to the playbook to 1929, 1933 is potentially off the table here, and then moving into its IPO season, and got to sit on a conference with Miguel Viez, man. I mean, whoa, things are happening. So let's start and begin to break all of this down. Let's start with the 1929, 1933 playbook and what you see going on right now.
Yeah, so the Fed has made it pretty clear that they're going to pump as much money into the system for liquidity as it's possible, and really there is no limit to the amount of money that they can put into the system right now. They will just continue to issue bonds, buying up from the Treasury, and then just lending that out as fast and as they possibly can. They know that they were already behind the eight ball before going into this pandemic, and now with the pandemic, they have to do even more. And so what we're seeing is that we've got the U.S. dollar starting to decline because of the trillions of dollars in liquidity entering the market. It's just inevitable. Now, I don't know if that's going to hold, if we're going to see a higher dollar. But one of the things that I do know is that with all the swaps set up between foreign central banks, the U.S. The Fed is selling dollars to those central banks, and so they want to keep the dollars, and it's steady, but at a low rate compared to other currencies, in order to maintain low interest rates. The one thing that they don't want is interest rates to rise. That will increase the value of the US dollar. When that starts to rise, they're all in trouble because those everything will start to fall apart at that point. All asset prices will fall. When the dollar goes up, stock market's going to go down, commodities are going to go down. We're going to be in that deflationary scenario that they will do anything to stop.
Yeah. So, in regard to that, in respect to all of that, and it certainly is unfolding this way. They're dumping tons of money into the private sector now to support everything you just said. Um, what about hyperinflation now? I mean, is it potential that we find ourselves dealing with hyperinflation possibly a little sooner because of this scenario, or no? What are your thoughts?
Yeah. So I mean, with all of the money printing that they're doing, the trillions of dollars that are coming into the market, it's stabilizing the dollar and it's stabilizing asset prices, and it's making the stock market rise slightly. So we've seen from the March low, the stock markets have gone up. The NASDAQ has outperformed everything, but it is part of their inflation mandate, right? Their mandate is to create a 2 to 3% inflation per year, as well as stable employment. Well, stable employment is way off the table at this point because I mean, there's just so many people unemployed, and they're not going back to work. They're probably never going to go back to work. But the idea is that they're printing enough right now, they think, in order to stabilize and create the inflation that they want, to head off the deflationary scenario. But of course, they're going to overshoot. And so they're just going to print more than is needed. And eventually what will happen is they stabilize prices. And then once the economy does start to recover a little bit and we get some economic activity again and the velocity of money starts to move again, all of the money printing that they did for whatever time period this is going to take, whether it's this year and money printing probably into next year, or maybe even the year after that, eventually at some point, they will overshoot their targets. And we're going to start to see inflation go to 4% instead of their 2 to 3% target. When that happens, then things are really going to probably heat up in the hyperinflation scenario, 5-6% I mean, we could see 7% would be devastating.
Wow. And you're talking about a huge impact here now, not only on the money, but obviously in the assets as well. So when you're talking about precious metals, cryptos, these things are going to take off, like a rocket. Yeah, everything's getting affected. So, okay, now let's shift gears.
Let me just clarify.
Oh, yeah.
And one of the reasons why that will happen is the U.S. dollar versus all the other currencies is going to drop sharply because we have outprinted everybody.
Absolutely. Yeah. And that is a sticky scenario right there. Cause I can't, you can't really, how do you take that back?
Yeah. That'd be tough.
It's tough, right? So, all right. So now let's talk about the effects of what's been taking place with the repo market. Now we're hearing that the repo market's been reporting as zero, but again, we're seeing a huge shift, as you described, in the investing and what the Fed is doing, as well as what the private consumer investor is doing as well. Can you talk about that a little bit?
Right. So there's a couple of things affecting the repo market right now that is also unusual, just like we saw in September of last year, where the Fed had to step in with liquidity because the overnight rates went to 10%. Well, now they're backing off from the repo market for a couple of different reasons. Number one is the individual investor and consumers have flooded the banking system with $2 trillion in cash from all of the money that was liquidated from the decline of the stock market in March of 2012 and all of the 401k redemptions. And so all of that money went into the banks. Now, with $2 trillion in new inflows, cash of the banks, they don't need to activate the repo market as much. The second thing is the cash reserves were reduced to zero. So when the Federal Reserve reduced the cash reserves to zero, there's also no reason to do any kind of repo operations overnight because they have the liquidity that they need. So those two things alone. And then the third thing is that they're not really reporting, right? So there's a lot of things that they're not reporting on all of a sudden. They've been late reporting or they're not reporting at all now. Very few people have really paid attention to this. But even though they're not doing any repos at all, they need to continue this reporting, but they're showing zero. So we saw that actually about 6 weeks ago, that they were doing minor repos but nothing else, and that's because the reserve requirements have come down. But they're also not telling us who is receiving on the other end all of these loans that they're providing, right? So there's no reporting going on of who's receiving these small business loans, who's receiving some of the largesse of the Fed and the Treasury. And it's something that probably, if you had said 20, 30 years ago that the Treasury and the Federal Reserve were now partners of some sort, it was unheard of, unthinkable at the time.
Sure.
But now there's absolutely no doubt about it. There's been a kind of a melding, the connections between the Fed and the Treasury have always been kind of separate. They want to keep everything independent, but that's no longer the case.
Because you bring us there now. Of course, I'm gonna make a speculative comment, but I'm only making it, and it's not to put a flag on the moon, but because we are in uncharted waters, as you just described with the Fed and the Treasury. I want people to like not take things off the table. Because we are in a historical moment, and it's important that we understand that, and I'm not suggesting that they're flying by the seat of their pants. I think they have a plan, and whatever their plan is, we just don't know exactly what it's going to be. They've broken away from the playbook of 1929, 1933. That is obvious. We know that they took the reporting of repo off the table, so we don't clearly get to see what's happening anymore. That is sleight of hand. I mean, that's absolutely intentional right there. I would just, I'm not saying it'll happen, but I'm curious if the Treasury does introduce at some point down the road here, maybe a new Treasury dollar bill like Robert C. Hockett from Cornell University had proposed. I can, and look, we don't know that this will happen, right? But I have to say that what's out of the realm of possibility in this day and age, Dave?
Right. So when you think about it, we talked about this before, is the fact that cash, the actual transmission of cash between people, is probably going to be unpalatable if we do get a second or third wave of this pandemic. Right?
Absolutely.
And so what they're going to do is they're going to attack cash, because when you think about it, the only connection that we have in physical items that is transacted on a daily basis is that cash being handed back and forth. That I mean, they could say, hey, this is a transmitter, of the virus, and we can't have it. And then so we have to replace it with something. And so they're going to use the health crisis as an excuse in order to introduce the digital dollar. And now you got touchless, cards or something like that. It's going to be used from machine to machine. And so that's the way that they're going to introduce it. In my opinion, I think it's exactly what's going to happen.
Yeah, I agree.
They're going to have, there's so many different things that are going to take place. It's probably going to change the way our society functions in the future. And that's going to be a big one, because it's something that is done every single day. Coins, cash, all of that is going to be gone. I can see it. I don't know when it's going to happen. I don't know. It could happen 5 years, 10 years from now. It could happen next year. I have no idea, but it's going to be phased out.
Yeah, I completely agree with you. And again, none of us know when this tipping point takes place, but I know early on when this pandemic started, my cynical side went up right away. And the first thing I was saying is that, well, that's the reason they came out with the article that germs got on a dollar bill for 17 days to stop a bank run from happening, because then you're not incentivized to go get the money out of the bank, because that stuff's dirty too. And now the narrative's getting stronger to move towards exactly your point with the stimulus, about issuing that stimulus in a digital form or debit card or in some fashion or way that it's not cash. And then we're seeing shortages of coin shortages throughout the country in different places where people aren't able to offer coins. They're asking you to use a card transaction of some sort other than cash. All of this is really building that narrative as we go further down into this thing. And you said it. If we get another second or third round of this thing before having a vaccine, right, which is another conversation I don't even want to have. But if we have another round or two of this thing without any kind of vaccine or something, it's Katie bar the door. I think it's absolutely get the cash out of the system, whether they repatriate to the digital dollar of the same Fed dollar, or whether we move to a digital dollar that's a treasury dollar bill that's issued. I don't know. But what else I find funny before we move forward here is that Visa had that patent application about being able to repatriate the fiat dollar to a digital dollar. They obviously don't control the US dollar, so they had to have the government's permission to pursue a patent of that sort. And if that is in fact true, or if not, and we know it's true, but if they actually enact a patent and put it in place, they would become a repatriating machine. It would just be this kind of, mill that just takes it in and back end turns it out to whatever needs to happen. It's pretty remarkable.
Yeah, I think you're right on that. And so all of the cash, you're talking about cash deposits back to the banks, and they're going to make it easy for people to do that, because they're going to give you an incentive to do it.
Yeah.
And probably incentive is say, hey, look, you deposit $100 today, we'll give you 110 in the new Fed coin, in
yep.
US digital dollar. So they're going to try to make it as easy as possible for everybody to do that. The only people who are going to be allowed, and I think it may be even a law, are numinous. So anybody who's collecting
yep.
at that point, and they're going to have it in a secure package. It's going to have to be plastic sealed, and so that you can't actually hand those back and forth, the actual bills back and forth. But something like that I can see happening as well.
Oh, what a good point.
So if you have some digital, if you have some dollars that you don't want to turn in because they are somewhat rare, then you might want to get those graded and sealed up right now in order to prove that, in fact, they aren't transmitting anything, at this point. So
that's a great point. A very dear friend of mine, long dear friend of mine, is a numismatist and deals heavily in gold and Spanish doubloons and those type of things and colonial coins. I mean, just a massive collector in that space. And he was just talking to me the other day about the fact that he's like, gold keeps going where it's going. I think I'm going to start my little eBay business back up, which is not so little, by the way. But he does his market based on how hard gold's moving or not, right? So I mean, it all plays heavily into that as well. Okay, so repo market, Federal Reserve, buying the corporate bonds. We've covered all of that. Let's move into its IPO season, Dave, for blockchain and crypto and everybody else, right?
Absolutely. And before we move into that, I just want to make one other statement about
Yes.
the Fed. It's a little known fact that the Fed was actually audited back in 2011.
Really?
And everybody complains the fact that they're not audited well. Yeah, I wouldn't want them. I don't think they want an audit today. But back in 2011, after the financial crisis, Congress called for a mini audit. So it wasn't a full audit. It wasn't a full-on audit, but it was an audit of some kind. And it was amazing. Even at that time, they were doing swaps with foreign central banks, and they were investing. Actually, one of the investments that they made was in Toyota. And so they're in a couple of foreign car companies. And so, and what they did was they said, okay, part of the deal was that they were pressured to have Toyota set up factories in the United States. So they're actually in there negotiating trade deals. Now, this is not something that the Fed typically wants to be involved in or is known to be involved in, but they are. They have their hands in so many things. I think it's really hard for a lot of people to kind of grasp the extent that the Fed has and the extent throughout the government, throughout foreign central banks, and throughout, large corporations and entities around the world. It's pretty amazing.
It really is. I tell you, it is uncharted waters that we are in. And if anybody thought we were in a capitalist society, think again, because that's socialism by definition.
Yeah, there's no more price discovery. There's no price discovery. I mean, almost every single thing that you can think of that has to do with the healthy economy, manufacturing, or anything else is really controlled. Prices are controlled by the government at this point, based on their monetary policy. So It's very far from being a pure capitalist society.
Wow, I tell you, it is one of the most interesting things I've tracked and watched in my entire life. And I do believe we are watching something that you will not see again for 5 or 6 lifetimes. I really do believe we're seeing something that's special.
Yeah, absolutely.
Yeah, for good or worse, better or worse, right? Okay.
All right, let's move on to
IPOs.
IPO season.
Yep. IPO season.
I tweeted that out. You picked up on that. Planeteer came out with their confidential IPO plans, and they're quite an interesting company. And I saw a nice video on diving deep into what they do. But they're a data company, and they do some deep dive data for the U.S. government. And they've been a very secretive company for a very long time. So it's no surprise that they did a confidential IPO.
Well, okay. This is just, when you put it out, and I was like, first of all, the first thing that got me, I know that we had talked that, summer, July was a really peak moment for IPOs. You had told us that. And I was like, wow, okay, so who's Planeteer, and it just really, I've never heard that name, and I was like, okay, let me check it out. And when I looked into what they do, and I saw that, they're dealing with the NHS, right? They're dealing with the CIA, the FBI, the branch.
All the 3 letters.
Yeah, all the 3-letter agencies. It's like, what the hell is this? And branches of the militaries, whether it's the Army or Marines, whatever it is, and there's a couple branches of the military there. You start to realize the enormity of exactly what this company is doing right away. It is immediate, right? So
the CEO is an interesting guy, and he's very secretive about, the kind of contracts he has with different government agencies. You can't get a lot of details on it.
Peter Thiel, isn't it?
No, he's not the CEO, is he?
I don't know. I can't remember. I know Peter Thiel is involved.
He may be an investor, but
I think he's an investor. He's not the CEO.
But I can't remember his name off the top of my head. But he's an interesting guy because he's been in data for a very long time. And I heard him talk a couple of times, and he's very secretive. I mean, I think he was on Bloomberg, and they couldn't get a peep out of this guy. I mean, yeah, we're doing something here, and we're doing something there, but what he actually had to do does was very, very secretive. And I think the interview I saw asked him if he was going to go, if he had any intentions of going public. He said no. But I think at this point, similar, I think, to the kind of maybe, it's inevitable that a lot of these companies that receive early seed funding, those early seed investors want to, go have the company go public to cash in,
take profits. Yeah. Alex Karp, is that his name?
Yeah. Okay,
Alex Karp. Yeah. Okay. So yeah, we pulled it up there. All right. So here's an interesting thing that's really, I find interesting, about Palantir is that, okay, so they deal with all these government agencies. They chose to do a confidential IPO. For those that don't know, you can IPO the company in a normal, traditional fashion where you have the S1 filing and then the 5 to 6 month prospectus period where everybody can take a look at the books and the papers and do all of this. But a confidential IPO is now open to anybody since 2017 who chooses to do so. You still got to do the filings and all of that, but it's all held sealed until you get ready to go to your roadshow. And 15 days before the roadshow, you make the announcement. There's a 15-day window period for people to take a look at stuff, and then the 10-day roadshow, generally speaking, and then you list, and that's it, right? So we're talking 25-day period when they say, hey, it's happening. 25 days later, they're on the market, right?
Right. So that the confidential IPO was only available to companies under $1 billion in valuation. Now it's to any company, like you said, in 2017.
Yeah.
And so a lot of companies can take advantage of that. Uber did that as well. And so when they went public, and it's good because even that small amount of time frame, that 25 days before an IPO takes place, could mean the difference between a knockoff of some company coming in and to compete with them in that short period of time.
Wow.
Technology today makes it very easy to knock off just about anybody, right?
And
so the SEC said, hey, look, we understand the competitive nature of business. And if you want to do something confidential, we'll review your S1 before you go public. If we approve it, then go ahead. We'll keep it secret and we'll keep it confidential for now until you're ready to go on your roadshow. And so that's exactly what they've done. Now, I can imagine that Ripple would probably do the same thing because they are in a very, even though they're the leader, it's very competitive, and it would be very easy for, I think, a lot of up-and-comers to be able to see exactly what they're doing, take advantage of the fact of, the IPO in order to start to reverse engineer what they're doing and try to compete with them.
This is a beautiful segue because this is exactly what I felt like when I saw Palantir. Now, I'd covered the confidential IPO before this, and we talked about the potential of it happening, but I feel even stronger that Ripple may choose this path. And look, I'll be happy to be wrong. I've been wrong before. It's totally fine. But I feel like they have a really good, you could make a great argument at why they should do that. One, for the things that you said, competitions, knockoffs, people coming in trying to steal your thunder during that 5 to 6 month prospectus period that's public. The other side of this thing is like, you don't want competitors looking at your books. And I'm sure that they don't want a bunch of retail investors digging down into what's going on too. And it's not to suggest that there's anything wrong happening. But it's just, you don't want that happening, right? You want to keep your business, and take it to where it needs to go. The other thing is, when you look at what is believed to be the reasons that Palantir went through the confidential IPO based on their relationships of government agencies, is it that different to look at Ripple? And the first thing that rings in my head when I found the partnerships that they had with Palantir is Michelle Bond from Ripple going, we're working with over 50 governments. And I thought, oh my God, Dave.
Yeah, exactly. So they're working with 50 central banks. They have people from the Treasury on their board of directors, and they have, other, former officials of different government agencies and different positions in the U.S. government. So it's like, yeah, I don't know if they'd want to actually kind of reveal all of those ties at this point. Nothing wrong with that. But at this point, they want to say that, Hey, look, we are in a competitive industry. I think we're an early leader in that industry. We want to stay an early leader. So it's simply the idea of having a competitive advantage for as long as they possibly can.
Absolutely. And we'll keep an eye on it, obviously. But I mean, it just seems to me that just from the backyard, looking across the fence, it looks like a good choice for the company to go that
It's
road.
quite possible, absolutely.
Quite possible, right?
They may say, hey, look, you know what? We want to be upfront and transparent. We're going to go ahead and file our S1 without confidentiality, and that's their call. If they feel really comfortable doing that, but it's their call on that, and we don't know which way it's going to go, but we could see it both ways.
100%. There's no question about it. Okay, so with that being said, I've been fortunate enough to sit on to be invited to sit on some conferences with Link2, and it has been a great experience. And we've seen Ripple have pre-IPO stock on there. We have seen Uphold have pre-IPO stock just recently added there. Palantir as well. And there are going to be more to come. I said yesterday in a video and on Twitter, and I really do believe we are entering, and we'll look back on these moments seeing this and see that this is the beginning of the crypto.com era, where the IPOs begin to march out, right? Uphold. Ripple at some point is going to go ahead and full-fledged IPO, right? I mean, we're seeing COINBASE is now filing the paperwork. They're on Shares Post offering pre-IPOs. They're going to intend IPO.
I think that is the shot heard around the world as far as blockchain IPOs go.
Isn't it?
COINBASE goes public. That's incredible.
Talk about that.
And now they're going to have an investor day in August. I think it was August 14th, the first ever investor day public meeting. And so I'm wondering if that's going to be, if that is the first day of their roadshow. And so maybe they're filing, they're going back with the SEC. I can't imagine why they would have an investor day on August 14th publicly announced to just about everybody, unless they were going to do something like that.
And for their chief legal officer, they picked up Paul Grewal, who is a former federal judge. I think this really helps with the transition here. You know what I mean?
Absolutely. And who was it recently? I think it was either you or DAI did a video about someone who said, as soon as they see an IPO from a large blockchain company or in the blockchain space, as soon as they go public, this thing's going to open up like a floodgate.
It was probably DAI, but I mean,
DAI's video.
Yeah, he's been on fire.
Giancarlo or somebody said that. I forgot who it was, but yeah. So shout out to DAI for
big time,
because I thought that was an absolutely incredible statement. As soon as Coinbase or any of these blockchain companies go public, and I'm not talking about the miners. There's a couple miners that have gone public. Mara is one, Riot is another. Those are blockchain miner companies. But this is a mainstream, consumer-based blockchain exchange going public. That's a big deal.
It really is, man. It is a huge deal. And I completely agree with that statement from DAI's channel and Giancarlo. That's why I believe we're moving into the crypto.com era. If this whole thing doesn't work without market infrastructure, well, the very companies that are IPOing themselves are the ones creating that market infrastructure. They're the people you're going to call when something goes wrong. Actually, they're the people you're going to call, like Ripple, in order to figure out how to get your business properly brought into this new system. And whether, hey, do I need a cryptocurrency with my business model? Do I need to update my legacy systems? What does it take for me to get what's the best, advantage for my company to take and use this new system in my business? There's so many questions depending on what area of industry and business somebody's in. It makes sense that Ripple's a blockchain infrastructure company. But with that being said, Ripple has just recently announced that they're going to start lending and doing loans for their RippleNet customers. Does this hint to you that they may move to be a bank? Does this hint to you that they stay a blockchain infrastructure company? You got any thoughts on that at all?
Well, I think it's interesting that the market is at a point right now where it's changing so fast. You did a beautiful video yesterday. I forgot the name of the company.
Vesto.
Yeah, very interesting. Oh, I mean, who would have ever thought that anything like that could happen before this whole space blew up? But they're like right on the leading edge of this DeFi and digital finance and be your own bank kind of trend, right? And so I think it's a very exciting time, and I think that more and more companies are coming to the forefront because they need to have this kind of adoption. What's really interesting is the New York Stock Exchange was a nonprofit corporation for many, many years until 2006, just before. I mean, we had obviously from 2006 to 2008, 2007, the market just shot up before it dropped, but they were a private nonprofit. They went public in 2006. And I mean, all of a sudden you have, the idea of going public is so ingrained in the American way of life and the American economy. If there's anything left of capitalism left at all, it's the idea that a company can start from a garage and, ramp up to the point where they become a public company traded on a exchange.
Absolutely.
And so Coinbase going public like this, if they do go public, and that's what the rumor is, right? If they do go public, what does that mean for the ICO market? You have projects. We have, I mean, for the last couple of years, and a lot of people are concerned about the fact that a lot of blockchain projects have moved out of the United States and gone to other countries because the legislation is much more flexible, and they're more, they're more interested in these types of projects, and they're more accommodative when it comes to regulations. And the United States has not been. But when Coinbase goes public, what does that mean? It means that there's probably going to be a new look at the ICO market and saying, hey, look, maybe there is a place for ICOs, projects that started in somebody's, spare bedroom. And now they've created something with utility that can be presented to the market and listed on a public exchange like Coinbase.
Absolutely, man. I agree with you.
The dynamic of this entire industry, and I think it's something that everybody looks forward to as going public and having their company go public and creating for all of their investors and all of the executive and everyone else who owns shares in that company becoming instant millionaires. It's just the American dream.
It really is the American dream, and it's such a great point that you make. A couple things. One, I want to remind people, if they don't know, Fidelity is partnered with Coinbase. That is a huge partnership that's been there for at least a year and a half or more. Then the other thing I wanted to point out too is such a great point you make about the ICOs, right? And the potential of how the ICOs and the IPOing of something like Coinbase, and that they become this platform that introduces these ICOs. And to build on your point there, we just had Hester Peirce come up with the safe harbor rule, right? Which is a 3-year period to allow these companies to figure out if they are an ICO or not. What are you, right? Well, if we've come up with the safe harbor rule for these innovators in the garage, right, and now we give them the IPO'd platform that they go through, it sounds like we're starting to get a framework potentially in place.
Yeah, finally, the first time I mentioned the fact that ICOs could be back with the SEC setting up a node on the XRP ledger, that was the very first time we met.
That's right.
And I could see there was no way that the market would not allow ICOs again, but they do need the regulatory framework in order to make that happen, because they see the potential for growth in the economy, for wealth to be just, to come back into the economy and the velocity of money. And so, I could see that way, way ahead of time. I'm just so early on everything that it's like, okay,
but it's better than being late. You know what I mean?
Yeah, give me 10 more years, it'll come to fruition.
Yeah, we'll all be right if you just have another decade in you. You know what I mean?
Yeah, exactly.
Oh, that's so funny. So, okay, so the IPOs, and then we're seeing a lot of things starting to happen with derivatives and opening these corridors and things of that nature. It's like nothing is really like saying Ripple XRP directly, right? But I think we all understand, you pay attention to the news. India is now building a bridge to the banks so that they can deal with cryptocurrencies and invest, and for themselves and their clients as well. Now, we know that the U.S. has relaxed the Volcker rule, which allows banks to get into private equity or hedge funds now and make riskier investments than they could beforehand. Can they third party invest in crypto? You bet they can now, right? So if you look at Vesto that you mentioned, it was in the conference the other night. This is interesting, and for anybody that didn't miss it, the elevator pitch on this thing is that it is a for services banking platform that ties in the new digital age, right? So they offer stablecoin conversion, cryptocurrency conversion, a list of DeFi products that offer like raging 12% rate, interest rate for their clients. Their business model is based on licensing fees, maintenance fees, and transaction fees at like very small amount for the transaction fees. So then the banks can turn around and offer this savings, in a competitive way to their client base. It's interesting because
that was absolutely fascinating. That was a great video that you did on that.
Thank you. I appreciate that. And I wish I had more time. They were running behind the conference and I felt like I was squeezing to get the questions in that I did, but something they said was very interesting when I asked them where the liquidity came from in the conversion of all of this stuff. And let alone, let's understand, it's a banking services platform that converts cryptocurrency and gives out stable coins. I said to myself, and I even asked him, I was like, so is this to consumer clients? Is like, who's benefiting from this? I mean, this platform is suggesting that banks can deal in cryptocurrency now, is what this bank platform is saying in a large way. So when I asked them where the liquidity came from for these transactions and things of that nature, they finally said, well, we're working with a partner, Silvergate Bank, which is Barry Silbert, right?
Yeah.
And he said that they wired the money directly ACH, and then the transaction's wrapped on the ETH network, and they do whatever they need to flip everything. Now, Dave, what do you make of this, man?
That's pretty interesting stuff. I mean, Silvergate and Barry Silver, we know Barry Silver is probably one of the sharpest guys in this space.
I'll say.
He doesn't back anything that he thinks is going to just make him another $1 billion,
Yeah.
And this is fascinating. And I can see with the introduction of this type of service, a whole new I mean, basically, and I think they even said this in the introduction, or I saw it in the video on their website, was that, hey, look, banks are changing, and if you're not keeping pace, there's going to be a lot of banks that aren't going to be here anymore.
That's right.
And this is where the future of finance is going. This is the future of banking.
Yeah.
This is the future of lending. So let's say you have your digital assets, and instead of going to the bank and saying, hey, look, I got a really good credit score. No, I have a pay ID and I've got, 100,000 XRP and I want a loan. And I'm going to just, hey, okay, you got it. I mean, and then it's backed by, and I think you said it was backed by Lloyd's or something. I think they're
backed by Lloyd's Bank and Silvergate Bank. So they got it on both sides of the pond here.
Yeah, so it's fascinating. I think it's a new way for banking services to come into this new digital age of banking, and it's fascinating to me, I'll tell you.
I was blown away by it because I was just like, what? Wait, what? It's
I can see them white labeling their services to banks who want to take advantage of this. See, so they're acting as the custodian, they're acting as the back office for a bank who wants to enter this digital finance arena, and that's beautiful.
It is beautiful. And then when you think about the fact that the OCC, Brian Brooks, former chief legal officer from Coinbase, is just recently said, just weeks ago, he's going to release a federal charter that is going to be basically like a pilot program to really, unify all 50 states, so we don't have to, they don't have, these virtual asset service providers don't have to do the state by state licensing. They, if applicable, they'll be able to engage the Fed if they have something that's applicable to work with the Fed, and they'll be able to get FDIC protection. So you take a company like this that's positioned right here, right now, to interface with the banks, and it seems like we have to have further talks with these guys, but it seems like they're firewalled from the bank, where the bank can still deal in cryptocurrency and stable coins, but not technically be dealing in cryptocurrency and stable coins, because they got this interface, platform for services in front of them and the customer and or business, right? Is that what your impression was?
Yeah, absolutely.
To me, that is like, the workaround, right? It's like, well, this is what we're going to do until we get the things that we need. And it doesn't feel like we're that far from getting what we need anyway. All of this is just mounting to a tipping point. It's unbelievable.
Absolutely. And it's happening faster. So I keep thinking every time something like this happens, I go back to the statement that Ripple made early in the year. This was the year of the digital asset. When you think about that, and Coinbase potentially going public, and all of the other things that we've seen so far, it is. It absolutely is. It be the year that is the catalyst for this whole space taking off.
I'm just in all of it. So now let's talk about. Here's something I just can't come off of here. And now I want to have a conversation about XRP. And it being a currency. Now, we went over the whole thing. The X stands for, a currency that's issued from a non-sovereign country or whatever. It has to have an X in front of it, so XRP is what it is. John Carlos says it's a currency in a very well-written paper that looks a lot probably like what got submitted to the class action lawsuit in that argument there. We've heard everybody refer to it as a currency. I asked Greg Kidd in one of the conferences this past week if he saw it as a currency. He absolutely sees it as a currency. Okay, so this is the scratch that I can't quite reach. Okay, so let's assume, we don't have to assume. They pre-allocate or pre-contractually, OTC amounts of XRP to entities. They could be banks, they could be payment providers, they could be remittances. We know that they do that because Brad Garlinghouse confirmed it on Julia Chatterley's interview when she asked him, right? And we know that those contractual agreements sometimes are the obvious things like, the client doesn't do ABC 1, 2, 3. They're not going to receive whatever that is. It'll revert back to the escrow. And, the other restriction may be something as obvious as that client can't receive this and then dump all of it right back on the market. So we even know that they had an accelerator program that pre-allocated $300 million worth of XRP to prime the pump in different areas of industry with seigniorage, right? To get the incentive program going and those things. All very healthy implementation of the introducing an asset to the world, right? In a very measured way. Okay, so if everyone, not everyone, but if all of these players, let's just say RippleNet, are pre-contractually holding some XRP for someday getting this classification and designation of this asset, which I believe is a currency, which means technically there isn't any new rules that would need to change. We know how to tax a currency. We know how to handle and regulate currency. We know how to, these things about how to deal with currency are already in place. There is the FSOC, there's the Treasury Department, there is, all of these agencies, the OCC, right, the FSOC, right, all of these different regulatory bodies, and the Financial Stability Board internationally, right? So if we get this designation that it's a currency, this really doesn't involve any regulatory changes per se. It's just, well, that's what that is. So now we just use the things that are already in place to rule it and deal with it. My thing that I can't stop talking about, and I have great in-depth conversations with Big Skinny, and man, can we go down to a rabbit hole here on stuff.
Oh yeah, I know Big Skinny.
You know him.
You go down that rabbit hole pretty easy.
Yes, indeed. And you have to wonder to yourself that, okay, let's say as an example that we understand the currency point of view, right? So let's go down the rabbit hole of this. In Q2 2019, they sold 900 million XRP OTC. Okay, well that's a lot. We know that they're not using it, so we know that they're contractually bound to some agreements, whether it's been pre-allocated, right? All of this, right? Okay, what is the incentive for that 900 million XRP holder to use this? Tomorrow morning, it's a currency, okay? What's my incentive to use this collectively amongst us all, this 900 million XRP, if the price is still 17 cents, right? For the liquidity I need at this level? But I'm giving it out, right? And I'm using it and then it's gone. But if I understand long term, or at some point, if they a part of this contractual agreement, maybe they are collateralizing the ledger with dark pools that aren't plugged into the ledger yet. Because let's face facts, the value doesn't come to the token. The value comes to the protocol, and it's represented by the value in the token, right? So in my eyes, if these collective partners, customers collateralize the ledger at some point after it's a currency designation, the value could spike greatly, and then I'm incentivized to tap into my, contractual amount of XRP to do the right things with it, to continue to incentivize the network and grow my business and implement things. You know what I mean? Your thoughts on this? I cannot stop getting this out of my head here.
So one question for you,
sure,
before I respond, and that is in an escrow account. Maybe you're not sure, but maybe Mickey B has an answer to this. Maybe we can talk to him at some point. But in an escrow, can that escrow be terminated early? Is there any way that could be terminated early?
I don't know if it could be terminated early. What I do know from Bob Way's discussion, Bob had made it clear when he broke down the whole pre-allocation, pre-contractual agreements, that if the other party doesn't fulfill their obligations, the escrow returns, that agreement returns back to escrow. So I don't know if that answers the early question or not, but I will talk to Mickey B about that. I'm doing a show with him later after this.
So what I'm getting at is what happens if there is a escrow. One of the escrows is pre-allocated, and the entity that it is pre-allocated for decides, hey, we need to use this right away.
Right?
Can it be? Is maybe because we don't have the details, and maybe one of these research geniuses that we have in the community can find out if there is a smart contract associated with those escrow accounts to terminate it early if an event happens, if something happens. And so let's say one of the events is that there is a determination by the U.S. government in some sort of legislative act that XRP is a currency, is deemed a currency.
Sure.
Okay? And so at that point, maybe that is a trigger to a release of the escrow. Now, here's where I'm kind of thinking about this whole thing. And I don't know what you and Big Skinny had talked about. Big Skinny is a sharp guy. He's very, very smart. He goes down that rabbit hole and he's got some insights. But here's my thought on it.
Okay.
Is that some of the largest banks and financial institutions in the world, that are in the United States mostly, but some are overseas, have massive nostro vostro accounts and obligations. And so of those large ones, let's say the pre-allocation has gone to mostly the large ones, the ones that would benefit the most from the escrow, right?
Right.
If XRP is deemed a currency, and then all of the other pieces of the puzzle fall into place, such as, you know, maybe even deemed a world currency of some sort, a world reserve currency in which settlement takes place in the FX market and everything else, right?
Yeah.
Well, all of a sudden, let's say an event does happen and these large financial institutions have the pre-allocation of portions of the escrow. An event happens that triggers a release of that escrow to them so that they now replace their overseas funding for remittances back to them, and instead it's replaced by an equal value of XRP.
Now, see, that makes a lot of sense to me, because this is that, you know, pouring the bucket from the Nostro Vostros into the XRP. Now, this goes along with the flywheel theory, and I tell you, this has a lot of weight to me in this idea, because now you're talking about a very measured scenario, right? You know, a very calculated, measured scenario, which I believe this gets done in a very measured, calculated way, whether it's large jumps or not. I think you got it. Because that is the idea, is to unlock the dormant capital and move that over into the XRP bucket.
Well, now here's where I think it also is very measured, in that the foreign entity that is holding the funds for those accounts receives custody of the XRP, so that those funds, so that it doesn't do damage to the financial stability of that institution.
That's a great point.
So let's say, you know, a foreign entity has $1 billion that they're using, and it's held for JP Morgan or something like that, who needs to do foreign remittances and payments. Well, now it's replaced by an equal value amount of XRP. And so that there's no damage to that financial institution's solvency or balance sheet.
That's a great point.
And at that point, now we can see, hey, yeah, okay, this is great. We've got a repatriation of that USD. We've got XRP sitting there, and they're doing custody for it. And of course, the custody solution is poli-sci. So that it just seems to fit very well into the scenario, and it makes sense to me. It's a more measured approach to, rather than a complete redistribution of all these funds without by affecting all these foreign financial institutions that are really going to take a big hit if all those funds are repatriated.
Absolutely. And you make such a good point that when we think about this in long term, you know, or in a larger sense, you know, Greg Kidd acknowledged, you know, it's about the, you know, releasing the Nostro Vostros. I mean, Ripple has acknowledged broadly that that's the ultimate big goal, right?
They don't want to disrupt the financial system. They want to increase the stability.
That's exactly the stability of it. And by in turn, you know, we get that benefit of the velocity of money of this digital asset when they get a hold of it. You know, we've gone on this show before, but the velocity of money is going to be extremely important, because it is the advantage, as well as it is to not hold all of these different currencies of the world to do your daily business. But, you know, to the velocity of money of settlement time is going to speed up the hand-to-hand transaction that these things happen, meaning that the level of what you need to hold is now coming down. Right, because you're going to settle faster.
Right, and that goes back to your question about price. Well, what is going to move the price? It's when all of these, the Nostro Vostro accounts are filled with XRP, and they got to hold it in order to do these transmissions in the remittances. And so now, you know, you have here we have entities. We don't know. See, right now there's a lot of doubt over the XRP, right? Because we don't know what's going on with the escrow account. It's a large portion of the XRP that's available and so all of a sudden those escrow accounts start to get released based on an event in a smart contract, whatever that event is. They are flooding into and being held by and replacing the Nostro Vostro accounts, but they can't be, they can be spent very, very little. So they're being held. Now we know where they are. We know where they're sitting. And the cloud or the doubt about the escrow account is completely removed. And now all of a sudden we find that not only is all of these accounts funded with XRP instead of cash, all those cash is repatriated. We've got a flood of cash all of a sudden in the United States. It drops the dollar value of XRP skyrockets because that doubt is removed. By that time, it's too late to get in because we're already be at a level so high that there's no. It's going to be a FOMO like you've never seen before.
I agree.
So that's best case scenario.
Yeah,
right?
Exactly.
And then Ripple becomes a lender of last resort for the XRP for those institutions that can't get it or don't have it in the pre-escrow, and they probably have been offered. So I'm guessing that there's lots of financial institutions that were offered XRP for escrow to replace the Nostro Vostro. They didn't take advantage of it. Now they have to, in order for them, because it is a world reserve currency, they have to go into the market and they may not want to just buy and sell it. They say, hey, look, we need a couple billion XRP. Where can we go get it? Well, Ripple is a lender of last resort. XRP will lend it to you.
Yeah, exactly.
There you go.
Yep. And see that. Look, I tell you, it's just the most fascinating thing I've ever tracked or watched.
I'm telling you, your mind can think of many creative solutions to the problems of the economy, and they all come back to the fact that there is a digital world coming, and it can be extremely creatively, and all the problems of the economy can be solved with a digital asset.
Absolutely. There's no question, man.
Not all of them, but most of them.
Yeah, no doubt about it.
We still need a cure.
Yeah, we still need a cure. How about that? There's no question. All right, so look, let's unless you have anything else, let's final thought this thing, Dave.
That was my final thought. I just want to do a couple of shout outs. One is to Jay Hyatt, my buddy here on Fridays. And I just hope that he's safe, and sorry he could not join us today, but a shout out to him.
Big time.
And I want to shout out two people, Katie and Olivia from Atomic Wallet. As you know, I'm in New York State, and I can only use Coinbase, Gemini, and Bitstamp, and the number of coins are pretty limited on those exchanges. And so in order for me to diversify, I started using the Atomic Wallet, and I had some ETH that I wanted to convert to VET. And I did it on the Atomic Wallet exchange, and it was a very easy process to do. And I found it just absolutely fantastic. I had a very small amount that I had converted initially that didn't quite get settled in the time frame that they said it was supposed to settle, which is 5 to 20 minutes. And it was a little bit longer than that. And I contacted their Atomic Wallet support, and they responded within minutes. It was absolutely incredible. And I got a human response. And they gave me the link of exactly where the exchange was taking place. I could go and take a look at it, and I found out, and it looked like it still needed a couple of different transactions that needed to take place before it could be converted. And they were absolutely fantastic. So shout out to Katie and Olivia. I really appreciate it. And I've gone back and forth with them on a couple of different exchanges. So I picked up some, in order for me to diversify, the only option I have is something like the Atomic Wallet. Now, I don't think there's anything else like it, actually, because it's a wallet and an exchange.
Wow.
So I exchanged some a couple of coins from Coinbase. I sent it to my Atomic Wallet, converted it to VET and ADA, which was absolutely fantastic. Very seamless experience, very, very easy to use. And I went back and forth with Katie and Olivia on a number of support questions, and they were very patient with me. So I really appreciate them very much.
That's wonderful. And I'm glad that you've got a solution as of now that allows you to be able to move around like that. I know it's tough. There's so many people I talk to that are in New York like yourself, and it's just tough. You guys are just really, really held back from being able to really fully participate.
Yeah, and so my bags are full on XRP. I have a little XLM, which I can buy also, but I couldn't get any VET or ADA, which I wanted, and so this made it a way for me to diversify a little bit. So those are the only 4 coins I have right now, but I'm so happy to be able to diversify on those and exchange them. So when I want to get out of VET now, I can't put it on Coinbase unless Coinbase lists VET or ADA, which I'm hoping they will.
Yeah.
But if they don't, then I can exchange it using the Atomic Wallet back into XRP or XLM. So it's very easy and convenient to use.
That's wonderful. And I hope that the OCC, in the fall, when they come out with the charter that they're going to do, hopefully that will open the door for more businesses to enter the New York space like Coinbase and really open up the door for you guys on that. My final thought on this thing is simply this. One, shout out to Jay Hyatt and his family. I hope everybody's doing well, staying safe. Number 2 is that market infrastructure, it's just like real estate, location, right? Market infrastructure. I mean, it comes in the form of 2 different things, right? It comes in the form, 3 really. It comes in the form of the protocols that develop this space. It comes in the form of the IPO companies that are here as real brick and mortar places to go to support the protocols that are developed in this space and businesses. And third, the regulatory framework, right? These 3 things I believe, are exactly what we're watching happen. I absolutely believe we are entering into the crypto.com era right now. And I couldn't be more excited to watch what is taking place. And I say that, and we're 17 to 20 cents. It's like, I don't even look at it. You know what I mean? It's like, these things are the things that ultimately I believe move price. It's not advice or what have you, but that's what I believe, and I couldn't be more excited to see the things that are happening.
Well said, my friend.
Well, thank you. All right. Have a great weekend, Dave. Again, my favorite day of the week, my friend.
All right, thanks. And also, if you guys haven't checked out my other YouTube channel, copycatcoach.com.
Talk about this for a second. This is amazing.
I haven't done an update in a couple weeks. I've been so busy. I can tell you what I'm going to do is there's an email that's going out today listing all of the things that I've been doing over the last month. It's going to be the first month review of all of the things that I've been doing and all of the accomplishments. And you guys are going to be absolutely surprised and shocked, I think, at what happened over the past month on Copycat Coach. So stay tuned. I'm going to do a video and an email. So sign up at copycatcoach.com and go to the YouTube channel at Copycat Coach.
Now, I'm not going to say it, but he's actually told me, guys, what happened, and I almost fell out of my chair. Make sure you watch that video when it comes out. You will be blown away, no doubt. All right, Dave, have a great weekend, my friend. We'll see you soon.
Take care, buddy.
All right, take care, man.